Most homeowners think they need perfect credit to finance a roof. But here's what might shock you. I've seen homeowners with 8 to 10% HELOC rates pass up legitimate 0% financing from their roofing contractor because they thought it was too good to be true. Let me explain exactly what's happening here. You see, right now, banks are charging you 8 to 10% on home equity lines of credit. Meanwhile, many established roofing companies, including ours at Fortified Roofing, are offering genuine 0% financing for up to 60 months. Yes, with roofing right now, established contractors can actually beat traditional lending. The key thing to understand is that not all financing options are created equal, and there's a critical difference between promotional traps and legitimate programs. In this video, I'm going to walk you through 5 main financing options for your roof replacement, from the obvious choices everyone knows about to the hidden grant problems that could potentially cover your entire roof cost. More importantly, I'll show you exactly which ones to avoid and which could save you thousands. And if you're in New Jersey and need our 60-month 0% financing information, I'll explain exactly how that works too. But first, let me be completely transparent. I've been in the roofing business for years, and I've seen homeowners make costly financing mistakes that add thousands to their roof replacement unnecessarily. What I'm about to share could be the difference between a smart investment in your home and a financial burden that haunts you for years. The counterintuitive truth about contractor financing. Here's what most homeowners don't realize. The best financing rates right now often come directly from the roofing company, not your bank. I know that sounds backward, but let me explain why this is happening. Think of it like buying furniture. You'd expect the furniture store's financing to be more expensive than your credit union, right? But in the roofing industry right now, it's completely flipped. Many established roofing companies offer 0% financing for 12 to 24 months as standard practice. Some companies, like ours at Fortified Roofing, can extend that to 60 months with 0% interest on our signature Fortified Roof system. Here's why this works. Established roofing companies have relationships with specialized lenders who understand the home improvement industry. These lenders know that a new roof is a necessity, not a luxury purchase. They also know that homeowners who invest in quality roofing are typically responsible borrowers. This means they can offer better terms than general purpose loans. But here's the critical distinction. This only applies to established, reputable companies with strong financial backing. The fly-by-night contractors offering easy financing are not going to be able to offer you the best plans with the best rates. This is important because the right contractor financing can save you thousands compared to traditional lender options. But you need to know how to identify the legitimate offers from the traps. Why HELOCs aren't the smart choice they used to be. Now, many financial advisors still recommend home equity lines of credit, or HELOCs, for major home improvements. This advice made sense 5 years ago, but let me explain why it's outdated today. Home equity lines of credit are currently running between 8 and 10% interest. Yes, the interest rate might be tax deductible if you itemize, but here's what most people don't realize. You're putting your home up as collateral for what should be a straightforward home improvement project. Think of it like using a sledgehammer to hang a picture frame. Sure, it'll work, but you're using a much more powerful and risky tool than necessary. Also, a HELOC usually ties your home's equity to a variable interest rate that could increase significantly over the long term. Here's what really concerns me. HELOC rates are usually variable, not fixed. That 8% rate today could be 12% next year, or even higher if interest rates continue climbing. I've seen homeowners who took out HELOCs 3 years ago at 4%, now paying nearly 10%. On a $25,000 roof, that's an extra $1,500 per year in interest alone. But there's an even bigger issue that nobody talks about. When you use a HELOC for your roof, you're depleting your emergency equity cushion. What happens if you need that equity for a real emergency? Medical bills, job loss, or urgent repairs? You've already tapped it for something you could have financed at its 0% through your contractor. Let me share what happened to one of my clients. They used a HELOC for their roof replacement 2 years ago, thinking they were being financially smart. 6 months later, they needed emergency foundation work. Because they'd already used their HELOC for the roof, they had to take out a personal loan at 15% for the foundation repairs. If they'd used contractor financing for the roof, they'd have that HELOC available for the true emergency. The important thing to understand is that HELOCs should be reserved for situations where you truly need the flexibility of a line of credit, or when no better financing options exist. For a roof replacement where legitimate 0% options are available, using a HELOC is like paying 8 to 10% interest when you could pay zero. It just doesn't make financial sense in today's market. The hidden dangers in 0% financing fine print. This next point is crucial, and it's where I see homeowners lose thousands of dollars without realizing what's happened until it's too late. Not all 0% financing offers are created equal. In fact, some of them are designed to trap you into paying massive interest charges. Let me explain exactly how this works so you never fall for it. Many promotional 0% financing offers are what's called deferred interest loans. Here's the trap. If you don't pay off the entire balance by the end of the promotional period, let's say 12 months, you don't just start paying interest from that point forward. No, they charge you interest retroactively on the entire original balance, often at rates as high as 35%. Think about what this means. You finance a $15,000 roof at 0% for 12 months. You pay diligently, but you're $500 short of paying it off completely by month 12. Suddenly, you owe 35% on the entire $15,000 for all 12 months. That's $5,250 in interest charges that appear overnight. You went from thinking you had a great deal to paying over $20,000 for a $15,000 roof. I've seen this destroy family budgets. One homeowner told me they were just 3 days late with their final payment because of a banking delay. 3 days cost them $2,800 in retroactive interest charges. The lender wouldn't budge, and legally, they didn't have to. Here's how to protect yourself. First, ask specifically, is this deferred interest or true 0% financing? With deferred interest, the interest accrues but isn't charged if you pay on time. With true 0% interest, no interest accrues at all. Second, read the actual financing agreement, not just the marketing materials. Look for phrases like no interest if paid in full by. That's a red flag for deferred interest. What you want to see is 0% APR for the full term. Third, if it is deferred interest and you still want to proceed, set up automatic payments to ensure you pay it off at least 1 month before the deadline. Don't cut it close. At Fortified Roofing, our 60-month 0% financing doesn't have these gotcha clauses. It is a true 0% plan. By the end of 60 months, you will be paid off entirely as long as you make your regular monthly payments. But I'm telling you this not to promote our services, but because I want you to know what questions to ask any contractor about their financing. This is important because the difference between legitimate 0% financing and a deferred interest trap could cost you thousands of dollars. Always ask for the financing terms in writing before signing anything. Personal loans, the overlooked middle ground. Let me tell you about an option that most homeowners overlook but often makes the most sense. Personal loans from banks or credit unions. Personal loans are like the reliable middle child of roof financing. They're not the flashiest option, but they're often the most practical for many homeowners. Here's why you should consider them. First, there's no collateral required. Unlike a HELOC that puts your home at risk, a personal loan is unsecured. This means if something catastrophic happens and you can't pay, they can't take your house. Your credit will suffer, yes, but your family stays in their home. Second, you get fixed interest rates. In today's volatile rate environment, knowing exactly what you'll pay each month for the entire loan term is valuable. Some credit unions, in particular, currently offer rates between 5 and 7% for members with good credit. That's better than most HELOCs right now, and it's fixed, not variable. Here's what really makes personal loans attractive: speed and flexibility. You can often get approved and funded within 48 to 72 hours. When you're dealing with storm damage or an emergency leak, that speed matters. Plus, you're not tied to a specific contractor. You can shop around, negotiate, and choose the best roofer for your needs, not just the one with financing. Let me give you a real example of when this makes sense. Say you don't quite qualify for the best contractor financing because your credit score is 620, but your local credit union, where you've been a member for years, will give you a personal loan at 7% based on your relationship with them. That 7% fixed rate beats the 12% contractor financing you might qualify for, and it's more predictable than a HELOC. The thing to understand is that personal loans give you negotiating power. When you walk in with cash, even if it's borrowed cash, contractors often give better prices. I've seen homeowners save 5 to 10% on their project cost by being a cash buyer with personal loan funds. Here's my advice. Before you commit to any financing, spend an hour calling 3 credit unions and asking about their personal loan rates. Many people are surprised to find they qualify for better rates than they expected, especially if they have a relationship with the institution. This is important because personal loans offer a middle ground between the complexity of HELOCs and the potential traps of contractor financing. They're straightforward, predictable, and they put you in control of the transaction. The hidden money most homeowners never find. Now I'm going to share something that most roofing contractors will never tell you about. And honestly, there's no profit in it for us, but this could be life-changing for some homeowners. There are various state and federal grant programs that can help cover roof replacement costs. Some can even cover the entire cost. These aren't loans, they're grants that never need to be repaid. Let me explain how these work. At the federal level, the USDA Rural Development Program offers home repair grants up to $7,500 for eligible homeowners. The Weatherization Assistance Program can cover roof work if it improves energy efficiency. HUD's Community Development Block Grant Program funds home repairs in certain areas. Here in New Jersey, we have additional state programs. The Homefront program helps veterans and their families. The New Jersey Department of Community Affairs runs several assistance programs for seniors and low-income homeowners. Some counties have their own programs too. For veterans specifically, I'm familiar with grants available through private organizations like Habitat for Humanity's Repair Corps program. The Disabled American Veterans Organization also has assistance programs. These can provide thousands of dollars in roof repair or replacement assistance. But here's what you need to understand. These programs have specific requirements, income limits, age requirements, veteran status, and property location requirements. You might also need to prove the roof repair is necessary for health and safety. The application process can take some time. Often, it can take months. Here's how to find these programs. Start with your state's Department of Community Affairs website. Search for home repair assistance, plus your state name. Contact your county's Community Development Office. If you're a veteran, reach out to your local Veterans Service Organization. They know about programs that aren't widely advertised. I helped a widow last year who thought she'd have to sell her home because she couldn't afford a new roof. We connected her with a state program for seniors that covered 80% of the cost, and a local charity covered the rest. She kept her home of 40 years. The important thing to understand is that these programs exist, but they're not advertised. Most contractors don't mention them because there's no money in it for them. But if you're struggling financially and need a roof, spending a few hours researching these programs could save you tens of thousands of dollars. This is important because for qualified homeowners, grants can make the difference between getting a safe, quality roof and living with a dangerous situation. Don't assume you won't qualify. Many programs have higher income limits than you might expect. So here's what we've learned today. Contractor financing from established companies can actually beat traditional lending right now, but only if you know how to spot legitimate offers from marked up traps. HELOCs right now are expensive and risky in today's market, where better options exist. Those 0% promotional offers need careful scrutiny to avoid devastating retroactive interest charges. Personal loans from credit unions offer a solid middle ground with predictable terms and negotiating power. And there are grants available that most homeowners never discover because contractors have no incentive to mention them. The right financing choice depends on your specific situation, your credit score, how quickly you need the work done, and whether you qualify for legitimate 0% programs or grant assistance. But now you have the knowledge to evaluate each option properly. Here's what really matters. Your roof protects everything you own and everyone you love. Getting it financed properly means you can afford quality materials and professional installation without destroying your budget. The difference between smart financing and a bad deal could be $5,000 or more over the life of the loan.